Welcome back to another episode of From the Ground Up, real-time issues with real-time solutions for MWBE businesses. We are excited for you to join us for episode 4 of this series as we continue to engage in the important conversations that are happening. Queen Strategy Partners are a collective group of 3 businesses, 3 MWBEs, Danielle Douglas, Nicole Valentine, and myself, Dr. Stacie N.C. We came together because we understood that you can do more through collaboration, and within this MWBE space that there is a need and a niche that we can service and require our collective brilliance to come together and really make a mark and create opportunities and bring our services together to really be able to make a mark in our community. So we're excited that you are here to join in the show and just to see what collaboration actually brings and yields, and then what we need right now. We're going through a lot in this country. You know, 2020 has been filled with quite a bit for us to process, and we hope that this show allows you to work through these real-time issues and get the real-time solutions. So I'm going to turn it over to my partner and co-host, Danielle Douglas.
So good morning, everyone. Stacie and I, again, are really excited about you being with us this morning. We believe that you are going to get, again, a wealth of information that is very practical that you could use in real time to help you during this time to not only survive, but thrive. Last week, we did a show on the 5 C's, what every NWBE needs to know to be bankable. And those 5 C's was cash flow, capacity is directly correlated to cash flow, personal and business credit, collateral, and I'm missing one, Stacie. What's the other one off the top of my head? I feel like I'm missing one.
I think you got it
all.
all.
I got it? All right.
Yeah.
You know,
and character.
My partner in crime, you gotta back me up. I just gotta make sure. All right.
Yeah. I think we talk about character. I think you said character.
Character. See, Stacie, you hooking me up. As always, Stacie always has my back, folks. So when you have a partner, that's tip number 1. You make sure you choose someone who has your back. And my girl always has my back. So thanks.
Absolutely.
So today's topic is really, what is your cash flow capacity now during the COVID-19 pandemic? With the 5 C's, we wanted to peel back the onion a little more, right? And cash flow is so important. We were having a conversation with our guest, Andrew Walcott, and I will be introducing him momentarily, but we were just discussing with him how important cash flow is and how you need to track it. And I'm not going to steal Andrew's thunder because I haven't even introduced him yet. But with that said, if you don't have cash flow, you can't stay in business. And that is why this discussion is so important. So without further ado, I want to introduce our guest, Andrew Walcott. Andrew and I met because he was a participant of the Entourage Streetwise MBA program. He was in the Brooklyn cohort. We had a guest, Kevin Alexander from RDRC, who discussed the fact that we will be bringing that same program to Queens in the fall. So I have to remind you folks of that, because if you're interested in participating in that program, which is a 7-month program that assists business owners in really assessing their business, analyzing it, and coming up with some strategies on how they can grow their business, please visit the RDRC website. But with that said, Andrew Walcott is the owner and operator of Fusion East Restaurant located in East New York. Fusion East Restaurant is a full-service, upscale Caribbean and soul food restaurant with an Afro-fusion menu that has been featured on Good Day New York, News 12 Brooklyn, Caribbean and Life, and the Amsterdam News. As the founder and operator, Andrew is responsible for the establishing the vision and monitoring the execution of the expansion of restaurant operations. The restaurant opened for business in 2015 and has been a success and was awarded its first New York State contract in 2017 to provide cafeteria services to the staff and patients of Kingsborough Psychiatric Center in Brooklyn. Andrew is a product of East New York, Brooklyn, in the local public schools. He is a licensed attorney at law, as well as a certified public accountant, an Air Force veteran. In addition, he has served on his local community board for over 20 years and formerly taught at alma mater Brooklyn College for 10 years. Andrew began his career as a staff accountant at a local accounting firm and moved up the ranks continuously in his career. At various times in his career, he has served as chief financial officer and general counsel for a national recruiting company and chief auditor for the U.S. operations of a foreign investment bank. Andrew also had a private law and CPA practice for many years, whereby he provided legal and accounting services throughout the Brooklyn community. Andrew holds a Bachelor of Science degree in accounting from Brooklyn College, a Master's of Business Administration degree from Pace University, and is a night school graduate of Fordham University School of Law. Can I tell you, is that not a mouthful? But you, just based on the credentials that you heard, can tell that he has the 1-2 punch. He not only is a business owner, but again, he is also a lawyer and an accountant. So he's going to be able to answer your questions. But with that said, we have a couple of questions for Andrew. How are you doing, Andrew?
I'm doing great, Danielle. How are you today?
I'm doing well. Stacie and I are excited to have you with us this morning.
Yeah, absolutely. And, you know, Andrew, I'm showing a photo, well, an image of your restaurant's website to our audience. And I have to say, I'm totally distracted because now I'm hungry.
Well, stay tuned. Hopefully it'll be open in a few weeks.
We pray so with the reopening, but thank you for being here. Danielle's about to jump into some questions we have for you.
No problem, no problem. My pleasure.
I'm sorry. I apologize. I cut you off.
I said, no problem. It's my pleasure to be here.
Well, again, looking forward to you providing some great information to our folks. So with that said, we wanted to know, how do you begin as a business owner to assess your current business finances?
Well, generally right now, the most important thing is cash flow management, because with the restrictions imposed on restaurants in particular, I mean, we've had a decrease of about 90% of our revenues. And most of that, almost entirely, is from dine-in consumption by customers coming into the restaurant to sit down and dine in with their friends and family. We can still do takeout, but that was shut down for about a month and a half. We reopened it last week. We have a food truck, which has been on the streets now for about 3 weeks, serving different hospitals and shelters in the area. And we're trying to do more and more catering. But even with that, our revenues are still down about 90%. So right now, cash is king. So on a daily basis, I'm always trying to figure out how can we conserve cash, because we still have to serve our existing customers for a takeout, the food truck, and the occasional catering order. So I'm always monitoring my daily sales. We prepare sales reports daily, every day, to see what's selling. My biggest expense as an operator is usually food and payroll. And I generally try to calculate every week what my food and payroll expense are on a weekly basis. I don't like either one to be more than 25% of my total sales. So that combined food and payroll is never more than 50% of the sales for any particular week. That can generally give us some leeway to make a profit for the week. Every day I'm watching the cash balance in my operating account, because you may have a lot of assets in terms of, equipment, food truck, things like those as they come due. And this is the first of the week, the second of the month. This is the week that we start paying bills, from insurance, payroll, rent, a lot of fixed costs that go into running the business. If you don't have the cash flow to pay for those, even though you have a lot of assets on your balance sheet, if you don't have the cash to pay your expenses, you can easily end up out of business. Every day we get, at least I get, notifications for restaurants that went out of business, and you can go buy their assets at a deep discount. And I've gone to a few of these auctions over the past couple of weeks. And it's a shame when you go there and you see people who've lost their life savings and their dreams because they couldn't manage cash properly. So my main focus right now is really managing cash, and at the same time trying to reconfigure the business long term, so that maybe if dining does not come back the way it needs to right now, we can still find alternative means to keep the company going forward. But cash management is key right now.
Okay. Stacie, can I jump in before you ask your question? Because with that said, Andrew, I wanted to ask you, our first webinar was on how to pivot. And so during this time, I want to ask you, how have you pivoted?
Well, we want to focus going forward. I've always wanted to do it, and I want to focus more on catering going forward. Number one, it's more profitable than dine-in, but also there aren't as many restrictions imposed upon it by the government. We're not sure what kind of social distancing requirements are going to be going forward. Right now, we can seat about 90 people in the restaurant. If we're limited to, say, 25% or 50% of capacity, you might as well put us out of business, because we can't operate long-term with those kind of restrictions in place unless we find alternative ways to generate revenue. And one of the keys to that is going to be catering for us, I believe so. And to that effect, we have a new commercial coming out that starts airing tomorrow on different stations such as CNN, CNBC, Fox Business News, and things along that nature, to let people know that we have an expanding catering operation. And we also want to supplement that with our food truck as well as takeout. So in the past, we were primarily focused on dine-in, and we wouldn't mind going back to that as well. But in the future, I'd like to see about 50% or more of our revenues coming from catering as opposed to dine-in. And whereas right now, before the pandemic, it was about 75% dine-in, I want to change that going forward towards catering.
Okay.
That's a great pivot, Andrew. Just to be able to have that option. We know that in our conversations through the show, we've been talking about, all of the different challenges that businesses are meeting, particularly the restaurant industry has taken a hard hit. So to hear that you are looking at that pivot to catering and the food truck, those are innovative ways and ideas to keep going with your restaurant. But now let's touch a little bit on the tools. You mentioned that you're checking your cash flow and you're looking at what's happening on a daily basis. And we've been spending a lot of time just talking about some of the fundamental pieces of making sure that your business is cash flow positive. So what tools, what financial tools are you using within your business, and with your background of being an attorney and a CPA, what other tools have you come across that have been helpful for small businesses?
Well, our POS system allows us to check sales daily and monitor the food expenses and the payroll on a daily basis. So I can see on a daily basis what percentage I'm spending on payroll and food real time. I also can log on to my bank statements on a real time basis anytime during the day. So I can see what my cash flow balance is at any point in the day, see what checks have cleared, what haven't cleared, things along that nature. In my company, I'm the only one that has the authority right now to write checks. So, and I usually keep blank check stock locked away in the safe at the restaurant. So even though I do have managers, I mean, you can go through managers pretty quickly sometimes, and staff in general, especially during a pandemic. So I'm the only one that really has access to the blank check stock as it is currently, because you don't want anybody getting access to blank check stock and writing checks for $50,000. You never see them again. So I try to keep a very tight control on the access to cash, the cash balances. I run a daily cash balance statement to see what's going on in the statement, see what checks have cleared, the rolling balance. I'm also applied for the different government COVID programs that have been out there to enhance our cash balance sheet as well for going forward. And I'm also going to try to apply for a few SBA loans to help get through this crisis as we stand right now.
So the POS, the point of sale system that you're using, is that one that is just for restaurants? Is it one that you'd want to share or recommend just for businesses who might be at that point where they might want to either pivot to a new one or just see what options is something that's working for you that you would like to recommend?
Well, it's called PosiTouch. It's used mostly in the restaurant field. I'm not sure if it's used outside of that.
Mm-hmm.
I can see it being used in other arenas as well too. But I also use QuickBooks as well to monitor, because PosiTouch feeds into QuickBooks virtually, so we can monitor our cash balance, or as I can, via the POS system or via QuickBooks, as well as my the Citibank bank statement real time to see what's going on a real time basis in terms of cash in the company.
Okay, awesome. That's great information. I'll actually put up a link so folks can see, because it's my understanding that, QuickBooks is offering a free trial for folks for 50% off for 3 months. And I think they give the first one. So we're not endorsing, because they haven't sponsored from the ground up at the show yet. So we're just mentioning as a sample. But basically, I appreciate you sharing that you have the POS system, because that allows you to track. And like you said, at real time, you can go in, you can see what's happening on a daily basis. And with what we're seeing, we don't know how this rebuilding is going to actually play out, particularly for the restaurant industry, but for all businesses, small businesses here in New York. So thank you so much for sharing that.
So Andrew,
no problem, my pleasure.
You were talking about, you discussed with us ratios, like 75% of your business revenue was dine-in and things like that.
Mm-hmm.
So you have an idea of how much the percentage of your expenses with payroll and inventory. I believe you said 50%, correct?
Yeah, 25% each is my goal, to keep both of them under 25% each. And then in total, 50% of the total sales on a weekly basis.
So my question to you is, I know this may not be applicable during this time, but I'm not sure if it is. So my question is that I know for every industry that a business owner is in, they should have, there's a standard percentage of, your cost of goods sold, your general and administrative expenses, things like that. And if you are out of that percentage, then you know that you have to adjust your expenses accordingly to be in alignment with those percentages. Is that applicable during this time, in your opinion, Andrew, or you just got to wing it and it's like part art, part science? You look at the industry standards as well as the history of your own business and the percentage that you're spending on expenses in comparison to your total revenue. What does that look like?
I mean, it's a guideline that you should always try to follow, but it's tough during these times right now, because you're not generating the revenues that you used to make, but you still want to deliver some level of service to your customers, because they're going to expect that. The phone calls are still ringing for people to get food and get service from the restaurant. So you may temporarily exceed your goals in regard to some of these percentages temporarily. But you still have to be cognizant of the fact that going forward, you can't stay out of alignment for too long, because you're going to run out of business, you're going to run out of cash. And it always comes back to cash at this point, because big companies like JCPenney, Pier 1, and Hertz are all in bankruptcy, going out of business, not coming back. So if they're hurting in those arenas, you can only imagine for NWBEs what we're going through, because they have access to much more capital than we could ever dream of at this particular point. So if you don't keep a track on your bottom line, and especially the cash balance, you're not going to be around to see what could be a promising future, because they have made some changes that may help us long term. Because right now we can sell liquor with takeout. That was never the case before. And I'm hoping that they'll keep that in place even after the restrictions are eased to a degree. And with the restrictions, there are some new opportunities, because we can now sell liquor with takeout. That was not the case before, and that's been quite popular with customers. Also, they've waived the fees for outdoor dining. Last year, I spent about $5,000 to get the license for outdoor dining, the outdoor cafe license for the restaurant. That fee is waived this year. So once we get back to normal operations, we can have additional seating outside the restaurant now, as well as serve liquor with takeout that we couldn't before. So there are some opportunities for growth in the future with the changes in some of the laws. But you have to be able to withstand the current cash flow issues that we're all going through right now. So you want to, again, cash is king right now, and do everything you can to maintain cash. You want to monitor the ratios that we've discussed, but that is not most important right now. The most important thing right now is maintaining that cash balance to make sure. And I try to have at least 6 months of expenses covered in my cash account on a daily basis, because you just never know how long or what expenses may come up that you have to take care of immediately.
Okay, so you bring up a great point. It's a great segue to my next question, is that a lot of business owners may not have enough savings. You mentioned about the business owners that put their whole life savings in and now they're out of business. So is there a percentage of revenue that you should just, 2020 hindsight, but moving forward, is there a certain percentage of revenue, to get you to that 6 month mark? What's the minimum? It should be at least 3 months? Should it be the rule of thumb is 6 months? And for you to get to that number, is it a certain percentage that you put away on a monthly basis to get to that number?
You can get by with 3 months, but the pandemic, the restrictions went into place locally, I believe it was on March 16th. We're now in June. So if you only have 3 months, you're pretty much going to be out of business pretty soon, if you use that as a guideline. I feel more comfortable with 6 months, if not more, if possible. In the business operating account, obviously, if you have additional personal resources, you can always put that in as well. But in the operating account for the business, I prefer to have 6 months, because you can see 3 months have gone by pretty quickly already right now. And a lot of businesses have failed, and even more will continue to fail. So I really don't think 3 months is adequate in these times, because you still have, employees to pay. My insurance bill just came in. I have to pay that. You still have to pay rent, assuming you don't get a waiver from your landlord. In terms of percentage of revenue, maybe if you can afford it, 5% if you can. That may be tough in the restaurant industry, but on a monthly basis, set aside that amount to add to your cash reserves if possible. But you definitely want to throw at least 3 to 6 months of reserves in the bank, just in case a pandemic, even though this is a 100-year event, and a pandemic or some other event comes along that may disrupt your business indefinitely, and you don't want to fall by the wayside, and then somebody comes by your auction to buy all your life savings basically in a day or two.
That's a major point, because we don't know, and we see we're dealing with multiple crises right now that's happening for businesses. And when you talk about the reserve and the 5%, I think I really just want you to underscore, Andrew, for the MWBEs that are listening, how important it is to prepare for a rainy day. And if the percentage can't be the 5% that you recommend, how do you create strategies with the financial tools that you're using, or you might be able to recommend, that helps to put aside for that, or to plan, so that if right now in real time a business doesn't have 6 months worth of reserve, what can they currently do with the tools that they're using to build a strategy for creating that goal of 3 to 6 months in their reserve?
Well, every owner should know where their major expenditures are, whether it's in a restaurant, food and payroll. And payroll is probably prevalent in most businesses, unless you're a technology company to some degree. But you got to focus on your major expenditures and really try to fine tune those to the point where where you can cut, if you want to call it fat, as much as you can, so that you can get to that percentage and put cash aside. Because it's not always the best companies or the best food or the best product that wins. A lot of times it's the best planner that wins in the long run. And if you don't have the cash to withstand the blips that are going to come, whether it's the financial crisis in 2008 or the World Trade Center coming down in 2001, things are going to come up unexpectedly. And if you don't have cash to survive these temporary constraints, you're not going to survive. And if that's happening to the big boys like JCPenney, Pier 1, and Hertz, imagine a small MWBE. Most of those companies, I'm sure, have access to lines of credit and should have had cash in the bank as well to withstand these particular times that we're in. But the fact that they didn't, or maybe they exhausted them, is a cautionary tale for every MWBE to look at. Because if those companies can't get access to capital during times like this, you can forget it for an MWBE in general.
And you know what, Andrew, that you bring up a good point. And, I want to ask you, how does a business owner really assess and determine how much capital they need if they do have to get capital?
Well, I hope that most prepare a budget, if not annually, if not themselves, and maybe if they have an accountant. And that's one of the major, and you mentioned earlier, I have my own accounting and law practice. And one of the major problems I found with the black-owned businesses that I worked with, or brown-owned businesses, is that very few of them have professional advisors, meaning accountants. So they only will call the accountant at year end to do their taxes. But in terms of monitoring cash and planning for the year, bringing on investors, things of that nature, non-existent. I think one of the first things that needs to be done is that more and more NWBEs set up relationships with financial professionals so that they can make these kind of plans in place and they can work with them because it may not be their particular skill set and they're trying to run their business. Get those financial professionals on board as early as possible. It's almost like a fixed expense in my mind, so that if it's not your strong point, rely on them to prepare those balance sheets, income statements, those budgets that can get you to that 5% level. Because a lot of times if you come into a particular business and you don't have a business background, you may not know how to put together a statement of cash flows or a budget. Get those professionals on board as early as possible. Even though I'm a CPA, I hired an outside CPA to come on board after my first year in operations because I just didn't have the time to do it myself. And if I'm a CPA and I brought on an accountant, I think anyone who is not an accountant definitely should have one on board, regardless of COVID. That should be a fixed expense for every MWBE that really wants to grow their business and become a serious business person.
Well, I appreciate that because that, like you said, the fact that you are an accountant and you brought on a CPA to join your team, that speaks volumes. And the reason I asked you that question is because what we hear from lenders is that, oftentimes a business owner will say, I need $100,000. But then when the lender does the underwriting and look at their numbers, they can tell that the business owner just came up with a number that popped up in their head. There's no real basis. They don't have the cash flow to support that number or show that they have the expenses that will support even getting that dollar amount. And so that's why I asked you, about how does a business owner accurately determine how much capital they need. So that's one thing. The other thing is in our conversation, when we're talking about capital, you were able to successfully get the Paycheck Protection Program loan, as well as the EIDL loan. So how have you tied that capital that you received from those two loans with the fact that you had savings? How has that been working for you to keep you afloat, as well as for you to be able to implement the strategies that you want to moving forward?
Well, right now, I would say we're in a pretty strong cash position, so we're going to withstand this going forward. To get access to these different programs, again, to me, it goes back to having the professionals in place, because they were asking for documents like your balance sheet, your income statement, your tax returns, your 941 payroll reports. If you don't have those documents readily available, they're just going to go on to the next person. So even though you more than qualify for the money, if you don't have your paperwork straight, you're not going to get access to the funding. And that was a problem I saw when I was in private practice many times. It wasn't always what I would call discrimination. It was just that they didn't have their paperwork ready. And it's not their fault because they're so focused on growing their business. They just didn't have time to get all the paperwork in place. But if you have that professional who you can call on, you just send them an email and you get those documents in a few minutes. You'll be surprised how much capital can be available to you if you have everything in place. But that capital is in place right now for us to possibly expand the business. So if there's opportunities, say another restaurant is going out of business for whatever reason, we are equipped right now to potentially buy one because we have the cash in the bank to do that. We've rehired some staff already because we've restarted the takeout operations since last week. We've ramped up the food truck. We're going out every day to different locations to find new customers and to find possibly new locations where we can have a restaurant in the future. And we want to ramp up the catering division. We started a whole TV and radio campaign beginning today and tomorrow, running for the next couple of months, to advertise to the world that we have a strong catering operation. We've been giving back to the community. We're part of the community, and we want to be there for the future in the East New York location and other locations in the very near future. So that money is being used to market and bring back staff, and hopefully, if the opportunities arise, maybe expand to another location in the future.
So that's incredible. And I applaud the fact that you are an example of what we've been sharing on the past shows of having all of your house in order so that you were able to take advantage of these loans and now use it in a way that will position you to actually thrive once we are past this COVID-19, I call it the COVID-19 nightmare. But there was something that you said, Andrew, that I want to circle back to. You said you've been giving back. And we've touched on that for businesses as they're pivoting, as they're figuring out what this new normal is, the importance of really building that relationship with your clientele and your community. So you've been giving back, and I want you to just expand on what that looked like, because clearly it was an investment that you made. You weren't necessarily getting a return financially for what you chose to do in the community where you're located in Brooklyn.
Well, I mean, everyone considers East New York to be one of the poorer areas of New York City and parts of Brooklyn. But if you come by the restaurant, you can see that there's really a renaissance going on in the area. And we want to be a part of that particular renaissance. And when COVID hit, it came about the same time that we got our food truck. So we've gone to different hospitals throughout the past couple of weeks, almost month now, set up locations at Wood Hill Hospital, at Brookdale Hospital, at SUNY Downstate Hospital, helping to feed the hospital workers there for the past couple of weeks. And, you know, hopefully in the future they will remember us and what we did for them during this time of need. But regardless, you know, it's always good to give back. And usually what you put out in a few slices come back in loaves. And, you know, we can only hope and pray that people remember that the things that we've done during this particular crisis. And we also been going to different police precincts and donated food as well locally during this pandemic to try and lift the spirits of some of the police officers there as well. But generally, once you do give back, it usually comes back in loaves. And I grew up in East New York. My parents are originally from Barbados, but I grew up in this area. Even though I went to the Air Force, I still came back here. So I have a pretty good sense of what the area needs and the ways that we can help in our little way as a restaurant trying to succeed under these challenging times.
Absolutely. And thank you for your service to our country as a veteran-owned business. That is to be applauded. And another example of how you can give back. And being from Barbados, where is the flying fish? What do you have there, boy?
Oh, you know already. Okay.
Yeah, I'm Jamaican, so I know, and I have a couple of other islands in me, according to 23andMe. But I am appreciative of the fact that you have served the hospitals with our front line in the middle of this COVID disaster, and even our precincts. We see the climate that we're living in right now and what New York City is going through in real time while we're talking. So we just really want to celebrate, Fusion Fast and the fact that you are on the show today sharing some real fundamental things that our MWBE businesses can do when we talk about cash flow and tools and resources and what reserve looks like. I mean, these are some of the tough conversations because when you are bootstrapping your business and you have a great concept and idea, I learned the hard way, just to be transparent, right? That you can give and do all the wonderful things, but if you don't have the cash flow positive status, you're limited on your growth capacity and you're limited with what you can actually do with your product or your service in the marketplace. So this is an important conversation, and I really hope that our MWBEs are using this time of the forced pause on the world to really just clean up and figure out what things can be put in place. And what would you say to an MWBE that is really scared right now? Folks are just, there's so much uncertainty. They applied for these loans. They didn't get the loans. They don't have 6 months of reserve in place, and they're trying to figure out what to do to stay afloat. They're going after contracts as MWBEs, and sometimes those payments don't come in as timely as a private contract would do. And given your years of experience as an attorney, as an accountant, what glimmer of hope can you give MWBEs who might not be as fortunate as you are in the position to have been able to take advantage of the additional resources coming through the COVID relief?
Well, I mean, bad times don't last, but strong people do last. If you have a plan in place and you work your plan, you will survive. I mean, we survived worse things in the past. I mean, we survived slavery. We're still here. I mean, and that lasted 400 years. This is only 3 months. So, I mean, this will pass. But you want to spend the downtime strategizing. How am I going to make things better? How am I going to refocus the company? How can I get more cash in? Do you have the personal cash to put in? Maybe you can bring in investors. There may be people who want to invest in your business. Maybe you can combine with another entity, and your combined balance sheet will be even stronger, as opposed to going separate all the time. Maybe we can combine sometimes as entities. Maybe 2 different restaurants can come together and put their balance sheets together to make it a stronger company in combination. So you have to think outside the box in times like this, and don't get caught up in, say 25% this, 50% that. You got to think outside the box sometimes and figure out what works right now to get you through this crisis. But at the end of the day, you must have the cash in the bank or access to the cash to keep going. Because if you don't have that, it doesn't really matter how many assets you have. If you don't have that cash in the bank, it's not going to last. But there are different ways to get that cash. Again, you don't have to go through it alone. If you know somebody else in a similar business who is struggling also, maybe you can combine your assets to some degree and make it work temporarily. And then after that time passes through, you can move forward together. But you have to think outside the box and don't think the traditional route at this point, because what we're going through right now is not normal. But it also won't last either.
And Andrew, just to build upon what Stacie asked you and how you responded, is that I had the good fortune that you were actually in the capacity building program when you received the contract for Kingsborough, right? And I also know that you are looking, hopefully, to maybe take advantage of concessions with the JFK redevelopment project. So can you speak to that? Because for our NWBE audiences, it's an opportunity also, based on what you said, is not only to expand their thinking, think outside the box, think about collaboration, but also think about new markets, right? And if they haven't really pursued the government space, and that may be during this time, an opportunity where they may need to do a little shifting maybe, maybe not. But you're a perfect example that even having a restaurant, you're still being able to potentially take advantage of government contracts. So how do they plan for that as well, to thrive and think about new markets and position themselves to take advantage of opportunities in new markets?
Well, if you look at who's spending money right now, no one is spending money like the government. A lot of corporations are retrenching in terms of their spending to a degree, and even to a large extent. So, especially for MWBEs, there's a huge market out there, and there's another COVID bill coming down the pipeline, it looks like. So there's money coming down the pipeline right now, and probably even more coming down the pipeline. In our particular instance, I want to get, when I say catering, I would love to get more government catering contracts, maybe providing food for the schools, maybe providing food for the prisons, maybe providing food for homeless shelters. I would love to do that. So we're actually in the process of looking for a catering manager to handle that particular aspect for us, who has the connections in the government area, who can help us to solicit those type of contracts going forward. I mean, the commercials will get our name out there, but will definitely help us in particular to have someone who already has those connections in the government arena to come on board and bring that expertise on board. So that's one of the things that we plan to use the cash that we have on in the very near future to hire a catering manager to build out that particular business line. So that is not my strong point. You know, by trade, I'm an attorney and a CPA. I spent most of my career in the private sector. So I don't have the connections in the public sector that somebody else may have. So whatever shortcomings that I may have, I try to bring on people who can account or take over where I am weak at, and they can handle that particular business line for me. But for us, we're trying to bring on somebody who has that skill set and those connections to help us build up and expand the catering line. So whatever kind of business you may have, if you don't have that skill set yourself, maybe you could bring somebody on board. If you can't provide them a cash salary or a comparable or market rate salary, you may have to provide them a percentage of whatever they bring in, or maybe a small equity stake. But if you need that particular skill set on board, you'll find some kind of creative way to get it on board to fit into your business profile going forward. And that's what we're trying to do at Fusion.
Okay. And what you're saying, I know you said that getting back to the whole cash reserves and being cash flow healthy, it's very difficult during this time to balance that being in survival mode, but also trying to be creative and maybe potentially pivot in new markets. And then there's a level of investment that needs to happen to do that. So for those, as Stacie alluded to, that's more in the survival mode right now, and they're cash flow strapped, and they need to really think about how they're spending their dollars. How do you suggest that they do that? I know you discussed being creative, but getting back to that looking at cash flow, is it a certain percentage that they shouldn't go beyond, of trying to grow in a new market because they still have to reserve for what they're currently doing? What does that look like?
To keep it simple, I would look at your check log for every check you've written for the past 3 months. And that'll tell you where you're spending your money. Whether it's for a restaurant, say it's my trash pickup. Do I need 3 pickups every week? Probably not. So you call up the people and say, listen, I don't need 3 pickups. They only need 1 pickup. Every bill that you're paying on a monthly basis for the past 3 months, call them up. Say, listen, how can we reduce this bill? We have cable contracts, cable TV in our restaurant. Well, we don't have any dine-in customers right now. So you call up Cablevision or whoever it may be. I need this bill cut in half because I don't have the business right now to support this bill anymore. So every check you've written, I'll say over a certain dollar threshold, call up that particular vendor and say, listen, what can we do to reduce this cost? And that would include your landlord. That would include, your payroll, you can control that unless they're salary people, you can control that a bit more. Your insurance company, every particular check you've written for the past couple of months, call up that particular vendor and say, listen, let's work something out. I can't afford to pay this rate anymore. And that's how I would do it on a granular as well. But you do it that way as well, it'll work. And you'll be surprised at the savings you can get from doing that. And then when things return to normal, you can go back to the three days a week trash pickup or the regular cable channels you may normally have. But in times like this, every bill is on the table. Every bill is on the table.
That's a great point. And I hope businesses are paying attention. Like, don't suffer in silence. I say that all the time about everything. Just open up your mouth and ask for help. And, you know, everybody knows what's going on. And we hope that people's kindness or empathy to the situation will allow for them to work with you and pause certain payments or reduce them as you suggested. But Danielle, you were going to add something else as well.
How did you know that, Stacie?
Intuition.
The other thing I wanted to ask you, because that you did, I'm kind of digressing a little bit, but I want to pick your brain about this because we have you here. And that is because you took the PPP and the EIDL loan, we have spoken to other guests about the forgiveness part, right? And that you should have potentially a separate checking account to track the income and expenses. So how, for those business owners that were able to capitalize on PPP, and they're going to have to demonstrate how they spent the money, how have you done that? What is the best practice, again, from your accounting background, to do that, right? And to tie that into what we're talking about as well in regards to tracking your general income and expenses, the income and expenses that are allocated for the PPP. How have you been able to do that? Can you give some tips on that?
Well, generally, we use an Excel spreadsheet to keep track of all the payroll expenses that we have and for which individuals we brought back. And we always have an outside payroll provider called Paychecks. And they can show us how many people we brought back, what our payroll was, say, 3 months ago, and what it is now. So it'd be relatively easy for a combination of Paychecks and our POS system to see what our payroll was in March when the pandemic started and the restrictions started, and what it is now, and over the next couple of months as we bring back people. So it'd be a combination of Paychecks records, our POS system, and an Excel spreadsheet is the way that we will probably keep track. We will keep track of most of those costs, but that is not a primary concern of mine right now with the PPP money. I'm trying to keep the company going forward. I mean, you don't have to pay that back for 2 years. If I don't keep track of cash right now, 2 years from now doesn't even matter. So, I mean, I definitely am concerned about their payback and restrictions, but the guidelines for PPP are changing almost daily in Washington. And who knows if they're not going to change a bit more with a new administration, if a new one comes into effect in January of 2021. So I would tell anyone, I wouldn't personally focus so much on the repayment right now because 2 years is a while off. I would just focus on your cash flow management. But you can put the strategies in place that will allow you to keep track. And again, for us, that's an outside payroll provider, our own internal records from the POS system, and an Excel spreadsheet.
Thank you so much, Andrew. We appreciate that.
It's great information. We really appreciate the fact that you were able to share so much and that we could celebrate that we know somebody who got the PPP. Because it's not a lot of people that can tout that they were able to receive either one, and you got both of them. So clearly you have a blessing flowing over your head, Andrew. So we are excited, and that blessing was you were able to put things in order. Being an attorney in the CPA, of course, didn't hurt, but having, like you said, the foresight to hire people on your team that can manage the things that you don't have time to manage because you're working on your business and not in your business. And I think that is just something to celebrate. And we appreciate you being on the show with us today and sharing your insight. This is real time. We're seeing a lot now happening as these last couple of days have played out. And we really hope that as you continue to give back in the community, they will remember. I love that line, a couple of slices will return a loaf. I will be using it. I will give you credit, Andrew, but I will tell you now, I would use that one. because we need to see those lows return for so many businesses that are really in a critical place right now. We hope that the majority will survive, and particularly in the MWBE space, that's a whole nother show to talk about being prepared. Yes, and being prepared for concessions is something that we'll probably touch on in one of our conversations during our From the Ground Up series. But congratulations to you in being positioned to go after concessions with the JFK redevelopment program. Danielle and I both work with that program in different capacities, and we want to see as many businesses as possible take advantage of what this redevelopment will bring to the community. Even though this COVID-19 has delayed some parts, it's still going to happen. And this is a time for everyone to get in position to take advantage of those opportunities. So thank you again, Andrew, for being with us. I can't wait to come to Fusion Fast. I love my food. So
no problem. And don't forget, we got a mobile option. We have a mobile option. We can come to you now too. So don't worry.
Okay, well, we'll have to set something up for you to come visit Southeast Queens and be a part of sharing Fusion Fast out here. But continued blessings to you. And I'll let Danielle close us out today. This has been another great episode. This is episode 4 of From the Ground Up, real-time issues with real-time solutions for MWBEs. And it's been a pleasure having everyone join us today.
So Andrew, in my closing, can you repeat that saying again? One more time.
Which one?
The slices.
If you give out slices, they come back in loaves.
All right.
So don't just focus on yourself. Give back. It'll come back to you. Trust me.
Okay. And guess what? The reason why I wanted you to say that again is, yes, it does come back when you give. But during our first webinar, Stacie and I, the title was How to Pivot, Finding Your Vessels. And we talked about expanding your capacity and how a loaf can be multiplied when you use it efficiently and effectively. So here Andrew he gave you another nugget on why that is so important and how the principle of multiplication works. So that's my tip for today. And I'm going to say continue to come and join us for these webinars, because I hope that you find them, and I really feel confident that Stacie and I are serving the NWBE community. We are given real-time solutions for real-time issues, and we hope you are in agreement with that. We want to hear what other resources and tools that you need, because we want to continue to serve you as well. So until the next time, I'm going to say make it a productive week, and we're looking forward to seeing you next week, Tuesday at 9 o'clock for another great session with another great guest. So see you next week.
Bye-bye, everyone.
Bye-bye.